Good day, everyone. Welcome to General Mathematics Learned by Video series. I am Engineer Melvin John H. Banzuelo. I am a Certified Investment Solicitor or CIS. This is a license from SEC. SEC means Securities and Exchange Commission, which gives me power to solicit, sell, or offer to sell the shares or units of an investment company to the public. I also graduated as cum laude in Mindanao State University General Santos City, and also currently I am taking up Masters of Engineering program, major in Electronics Engineering in University of Southeastern Philippines. In this video, we will discuss stocks and bonds. This video still belongs to part 2 of General Mathematics topics for grade 11. Thus, we will discuss the continuation of the topic Basic Concepts of Stocks and Bonds. Let's sit back, relax, and enjoy learning. As we continue, we will describe the different markets for stocks and bonds and analyzes the different market indices for stocks and bonds. So, the learning objectives, we will study the market indices for stocks and the market indices for bonds. What is the stock market? When we say stock, that is ownership or part of ownership. That is a stock or property. When we say market, a market is a place where buyers and sellers can meet to facilitate the exchange or transaction of goods and services. Other examples include the black market, auction market, and financial markets. Markets establish the prices of goods and services that are determined by supply and demand. The stock market refers to the collection of markets and exchange where the issuing and trading of equities, usually when we say equities, those are stocks of publicly held companies, bonds and other sort of securities takes place either through formal exchanges or over-the-counter markets. Now, it is also known as the equity market. The stock market is one of the most vital components of a free market economy, as it provides companies with access to capital in exchange for giving investors a slice of ownership. So, slice of ownership also means part owner of the company. So, this is the Philippine Stock Exchange. Take note that stock markets are where individuals and institutional investors come together to buy and sell shares in a public venue. Nowadays, these exchanges exist as electronic marketplaces. Share prices are set by supply and demand in the market as buyers and sellers place orders. We have two common types of stock market. Number one, we have a common stock. When we say common stock, it represents ownership in a company and a claim on a portion of that company's profits. That is what we know as dividends. Investors can also vote to elect the board members who oversee the major decisions made by the management. Another, we have the preferred stock. When we say preferred stock, it represents some degree of ownership in a company but usually doesn't come with the same voting rights. With preferred shares, investors are usually guaranteed a fixed dividend. One advantage of preferred stock is that in the event of bankruptcy, preferred shareholders are paid off before the common shareholder. Always take note, the highest returns common stock probably also carries the highest risk. If a company goes bankrupt, the common shareholders will not receive money until the creditors, bondholders, and preferred shareholders are paid. The risk can be greatly reduced by owning many different well-established companies, and that is what we know as diversification, that have solid financial statements and a history of strong earnings. Most investors choose to invest in common stock instead of preferred stock. The growth and also as well as the loss potential for common stock is higher. Stock indices. By the way, what is an index? An index is an indicator or measure of something, and in finance, it typically refers to a statistical measure of change in a securities market. In the case of financial markets, stock and bond market indices consist of a hypothetical portfolio of securities representing a particular market or a segment of it. So, thus, the stock market index is a measure of a portion of the stock market. Now, one example is the PSE Composite Index or PSEI. Now, it is composed of 30 companies, usually selected to represent the general movement of market prices. The up and down or the up or down movement in percent change over time can indicate how the index is performing. Now, other indices are sector indices, each representing a particular sector: financial institutions, industrial corporations, holding firms, service corporations, and mining oil property. The stock index can be a standard by which an investor can compare the performance of their stocks. A financial institution may want to compare its performance with those of others. This can be done by comparing with the financial index. Stock indices are reported in the business section of the magazine or newspapers as well as online. So, these are the different sectors of the stock market index. The VAL means value of the index. CHG, that means change of the index value from the previous trading day. 1 day difference. So this, for example, the PSEI, at this time, the difference is 165.71 before the other day, the other trading day, and the percent CHG or ratio of change to value. That is the percent change of the value. So this is a Philippine stock exchange. Now, if you have an online account in one of the famous, the online stock broker, so you can see at the upper portion where the stock market indices. So these are the PSEI, the all shares, financial, holding, and the service. Okay, so actually this is the dashboard or my dashboard in my account in COL Financial. Buying or selling stocks. To buy or sell stocks, one may go to the PSE personally. However, most transactions nowadays are done by making a phone call to registered broker or by logging onto a reputable online trading platform. Those with accounts in online trading platforms may often encounter a table like the following. Now, this is the actual screenshot from the uh, COL Financial Trading Account dashboard. Now, where you can see, we have here the bid and the ask. And we also have the bid size and also the bid price. Same with here, the ask price and the ask size. And when we say bid size, it refers to the number of shares willing to be bought. So, like for example, if we have here 4.12 pesos, 93,000 shares willing to be bought. So, bid price is the price that people have offered to buy the stock. The ask size refers to the number of shares willing to be sold. Just like for example, 4.14 pesos, 230,000 shares willing to be sold at the price of 4.14 pesos. So the ask price is the price that shareholders have offered to sell the stock. Enhance your knowledge. Question number 1. It represents ownership in a company and a claim on a portion of the company's profits. A. Stock market. B. Preferred stock. C. Common stock. D. None of these choices. The answer for this question is that is a common stock. It represents ownership in a company and a claim on a portion of that company's profits known as dividends. Question number 2. In case of bankruptcy, which type of stockholders are paid first before the said event? A. Common stockholders. B. Preferred stockholders. C. Both common and preferred stockholders. D. None of these choices. So, the answer here is letter B. Preferred stockholders are the type of stockholders are paid first before the said bankruptcy. Question number 3. A and blank is an indicator or measure of something, and in finance, it typically refers to a statistical measure of change in a securities market. A. Index. B. Variance. C. Mode. And D. Median. The correct answer here is very obvious. That is letter A. That is index. Index is an indicator or measure of something, and in finance, it typically refers to a statistical measure of change in securities market. Bond market. The bond market is where debt securities are issued and traded. The bond market primarily includes government-issued securities and corporate debt securities, and it facilitates the transfer of capital from savers to the issuers or organizations that requires capital for government projects, business expansions, and ongoing operations. National governments generally use the proceeds from bonds to finance infrastructural improvements and pay down debts. Companies issue bonds to raise the capital needed to maintain operations, grow their product lines, open new locations. So the bond market is alternatively referred to as the debt or credit or fixed income market. So the government bond can be issued by the national governments as well as lower levels of government. At the national or federal level, these government bonds are known as sovereign debt and are backed by ability of a nation to tax its citizens and to print currency. And the usual terms used in government bonds, we have three terms: the bills, the notes, and the bonds. And when we say bills, bonds that are maturing in less than 1 year, notes, bonds between 1 and 10 years, and bonds maturing in more than 10 years. So again, treasury bill up to 1 year, treasury note between 1 to 10 years, and treasury bonds more than 10 years. Corporate bond. Corporate bonds make up a large portion of the overall bond market. Large corporations have a great deal of flexibility as to how much debt they can issue. The limit is generally whatever the market will bear. A corporate bond is considered short-term corporate bond when the maturity is less than 5 years. Intermediate bond if the maturity is between 5 to 12 years. And long-term corporate bond if the maturity is over or more than 12 years. What are the types of bonds? First, we have a convertible bond. When we say a convertible bond, it is a fixed income corporate debt security that yields interest payments but can be converted into a predetermined number of common stock or equity shares. The conversion from the bond to stock can be done at certain times during the bond's life and is usually at the discretion of the bondholder. Another type of corporate bond is what we know as the callable bond. Callable bond is a debt security that can be redeemed early by the issuer before its maturity at the issuer's discretion. It allows companies to pay off their debt early and benefit from favorable interest rate drops. A callable bond benefits the issuer, and so investors of these bonds are compensated with a more attractive interest rate than on otherwise similar non-callable bonds. Asset-backed securities or ABS. ABS, it is a financial security backed by a loan, lease, or receivables against assets other than real estate and mortgage-backed securities. What is an example of an asset-backed security? An asset-backed security is an investment security, a bond or note, which is collateralized by a pool of assets such as loans, leases, credit card debt, royalties, or receivables. For investors, ABS or asset-backed securities are an alternative to investing in a corporate debt. Bond market indices. The main platform for bonds or fixed income securities in the Philippines is the Philippine Dealing and Exchange Corporation, that is also known as PDEX. Unlike stocks indices, which are associated with virtually every stock market in the world, bond market indices are far less common. In fact, other than certain regional bond indices, which have sub-indices covering the Philippines, our bond market does not typically compute a bond market index. Instead, the market rates produced from the bond market are interest rates, which may use as benchmarks for other financial instruments. Now the question, is the bond market safe? Although bonds are considered safe, there are pitfalls like interest rate risks, one of the primary risks associated with the bond market. Inflation risk occurs when the rate of price increases in the economy deteriorates the returns associated with the bond. Enhance your knowledge. Question number 4. It is where debt securities are issued and traded. A. Debt market. B. Bond market. C. Fixed income market. D. All of these choices. The answer here is all of these choices because debt market is also known as bond market or also known as fixed income market. Enhance your knowledge. Question number 5. These are known as sovereign debt and are backed by the ability of a nation to tax its citizen and to print accuracy. So the answer here is letter B, government bonds. Question number 6. Which of the following types of assets is least risky? A. Short-term corporate bonds. B. Long-term corporate bonds. C. Stocks. D. Options and futures. The correct answer here is letter A. Short-term corporate bonds. It is make up a large portion of the overall bond market. A. Corporate bonds. B. Government bonds. C. Both corporate and government bonds. D. None of these choices. So the answer here is corporate bonds. So what we learned so far? We learned to describe the different markets for stocks and bonds, and also we analyzed the different market indices for stock and bonds. Now, from the learning objectives, we achieve the market indices for stocks as well as the market indices for bonds. For the next video, we will discuss business and consumer loans. With most essential learning competency, we have number 1, illustrates business and consumer loans. Number 2, we have distinguishes between business and consumer loans. And for the learning objectives, the student will be able to define business and consumer loans and differentiate business and consumer loans. For supplementary problems, you may refer to QuexBook General Mathematics Chapter 5. So that is from our mobile app. So thank you. That's all for this video of stocks and bonds.